Hello, everybody, and welcome to Hong Kong Blockchain Week 2020. What has been a very turbulent year, hence why there's a lot of crap behind me. I'm working from home, as are all of these wonderful gentlemen that we speak with. Tonight, we are talking to a panel of experts in the markets, looking at trading exchanges and different ways that people are getting access to these markets. My name is Craig Cobb, and I'll be taking you through and running this panel. I'm from tradercobb.com. We specialize in trading education and products. It's an absolute pleasure to have this star-studded cast in front of me. I have Rishi Ramchandani, and I'm so sorry if I pronounced that wrong. Did I get that right?
You're good.
Excellent. He's a director of business development for Asia for BlockFi, followed up with Quentin Reyes, who's the COO of SIBEX Exchange. We're going to get to the bottom of what that actually means and what they do. Alexandre, Kech, co-founder and CEO of Onchain, Custodian products and whatnot. A lot of stuff there to help us understand a lot of inflows from the institutional grade side of things, as well as OTC exchanges, hedge funds, the lot. And rounding out the four is Misha Alefirenko, COO of Velvet Formula. Did I get that right?
Yes, absolutely right.
A good start. All right, so let's kick this off. And by the way, thank you very much for your time this evening, this morning, this afternoon, wherever you are in the world, gentlemen. We know everyone's very, very busy at the moment with a very new starting bull market underway. And I want to start with first question here to Rishi. Before I ask you that question, mate, do you want to just tell us a little bit about BlockFi and what you guys are doing and what your role is there at the moment?
Yeah, sure. So BlockFi builds financial service products for crypto investors. So we have two sides. We have the retail side where we have three products that are currently live. So one is the interest accounts, where you simply leave coin or USD and earn an interest. So for example, 9.3% right now we're paying out on USDT. Then we have individuals who can that own crypto that can take a loan from us. We were the first company in the space to offer that. So very similar to how you would take a loan when you borrow off a portfolio of stocks, except with BTC or crypto. And then launched earlier this year, we launched the ability to buy and sell crypto. And then on the institutional side, which is actually where we're most focused on in Asia, we offer customized lending and borrowing for cryptocurrency, stablecoins, and USD. So institutions may borrow for a variety of reasons, hedging, market making, shorting, or other working capital. We also, for institutions, we also offer margin trading. So provide the ability for these institutions to go long or short on margin. And then just execution capabilities, so spot and futures OTC. We opened our London and Singapore offices this year, in addition to the US where we're headquartered. And the Asia and Europe offices are more focused towards institutional. And with this, we were able to offer institutional clients 24/7 coverage.
Wow. Sounds like you've got a bit on your plate there, mate. Okay, let me hit you with a question first up. Okay, so your background, sort of banking, finance, that sort of thing, right? You've worked with some of the biggest banks in the world and in America. Look, you've obviously come into the digital asset space and out of what would be considered probably a pretty good career move to move into banking at the time. What did your mother say when you moved into here, and why digital assets?
Into the crypto space. So it's funny, I was at one bank, I was at Merrill Lynch for over a decade. Most of it in Hong Kong, where I'm originally from, and then the last 3 years of it was in New York. So when I actually moved to New York is when I got exposed to the digital asset space. So that was 2015, 2016.
Yeah, nice.
So by day, I was an equity sales trader. And then by night, I was looking at all these coins and learning the market in this space. And it was early-ish days, but it was also leading into the whole ICO boom and everything. So it was fun in that sense. And then 2018, I took the plunge and actually moved to Singapore and started my own company. It was a tough time for the crypto space to start a company. So we pivoted to equities, but basically I had two companies over 2 years and then joined BlockFi. So it wasn't too much of a surprise to a lot of people, but I guess the biggest plunge was just going from the banks to start my own thing. I guess the leeway into the digital asset space, though, I mean, for maybe an older generation, it doesn't make too much sense, but I think anyone in our generation is not gonna frown upon that type of a career move, especially after you do a decade in the old space. And you kind of, after a decade, I think you know the ups and downs of it already.
Yeah, we don't look so stupid at the moment, do we?
The upside.
There's been a couple of hard years there, but it looks like we're on the right path. Now I'll come back to you, Rishi. Thanks very much for that. Man, what a journey. I mean, you've literally traveled around the world to move to, from banking into crypto, run companies now with BlockFi. So I want to come back to that. And I want to touch on the institutional side of things in just a moment, but we'll go through, and I want to have Quentin introduce himself as the COO of SIBEX, obviously. Mate, tell us a little bit about what you guys are doing, and then I'll hit you with your first question. So what's SIBEX, and what's going on over there?
Hi. Thanks. So basically SIBEX, so we're a Swiss company based out of Zug. So I'm based in Hong Kong, obviously, full-time, although as you can see behind me, I'm back in the motherland right now. So SIBEX, basically, we launched the company 2 years ago, and we think the future. So we in a way that how we focus right now on OTC transactions, and we think that decentralized protocols ultimately will reach to OTC big transactions, because really we're scaling up the opportunities of anonymity, that non-custodial, peer-to-peer, basically all these key features. And so we're OTC decentralized protocol. So basically it allows people to trade directly their Bitcoin to any ERC20 they want, directly peer-to-peer. So we don't consider ourselves as an exchange per se, more of the OTC protocol, and solving the biggest issues you have, which is right now trust, AML, all the stuff that more, I'd like to say, institutional people would use. So obviously our biggest users are not really retail. It's more people that are sophisticated traders who want to know the counterparty, who cannot afford to have even one penny that comes from money laundering at some point. So that's our key users. Why we saw this market opportunity, because we think that these big exchanges that have global access, we think the party's over. I think 2020 has been a good confirmation of that trend that is moving forward, is that every big exchange will have to focus on like a key market, because being compliant and all these regulations, it's becoming really more harder and harder. So we took the take about, we usually license our tech to usually sell sides or buy sides to connect already with network they are aware of. They create their own dark pool leveraging our tech. So it's a private trading room per se, and they trade within this private room, and then they apply their local requirements and legality on this. This is non-regulated our business. We just deliver technology there. So that's our market here. We think that there's going to be more and more clusterization, especially for institutional, because they play with additional rules, and we think that's the trend of the market right now. So that's really in a nutshell what we do. I like to say right now, obviously next year is going to be fantastic. Lots of stuff that we're going to wrap up, but yeah, that's in a nutshell what we do.
Well, I mean, you're a DEX, right?
Well, I mean, we go a bit further than the DEX. Basically, we don't, I mean, today, if you take a DEX, like the 800 plus on Ethereum. So we don't do that, right? For number one is that we scaled down cross-chain atomic swaps. We think that if you want to trade 200 BTC, it's a nonsense to wrap it. It adds additional steps, risks. You need to give it in a third party, and then we don't think AMM is a valid point for OTC2. I mean, today, if you take like the average transaction, if you come with 400, 600, Bitcoin at once, you just explode the poor AMM, right? And then the LPs, well, they have such a loss, covering that liquidity that we don't, I think we think it's great for retail, and, we're big fans of it, but we don't think AMM is the future to go for, big block transactions, which is our focus. So I like to say we're more of a protocol for this kind of stuff. We don't do aggregate order book. We really just deliver technology to our clients.
Yeah, right. All right. Well, thank you very much. Look, on the side of that, I mean, the reason I asked you if you were a DEX or not, because I know a lot of people like to use decentralized exchanges for somewhat anonymity.
Yep.
I always struggle with that word, but you know what I mean? Like it seems weird that you're bringing them both together, but I understand why you're doing it. You are looking at those OTC side of things, so higher trust factors and higher volumes, right?
Yeah, exactly. I mean, for us, there's this, as you said, there's a retail investor who would use a DEX, and for him, it's because he doesn't want to do KYC, ML, this kind of stuff. This is not really our market here. Yeah. We think there's way more interesting aspects of DeFi for institutionals, which is number one is like, actually, if you clear your trade using a stablecoin, and today, stablecoins I think are really widely accepted as a very liquid assets, right? I think that's just what it is. So people are way more comfortable right now to actually sell these big trades, and they use stablecoin as really a vehicle to be able to trade. And that allows you to trade with a a counterparty anywhere on earth and you jump over the banking system. And it's not because you don't want to use a bank. It's a question of opportunity cost. It means that today I can strike, and then let's say Bitcoin in the past 7 days, right? It just jump, 10%. Well, if you had to use a banking, if I was in Hong Kong and I want to use an American LP and it's taking me 48 hours, 72 hours in the best of the world, I miss it. Exactly. So I don't want to have this. And so we think, guys, decentralized architecture for this between, sell and buy side is just the holy grail, because in terms of opportunity cost, you can strike wherever you want on earth in the right liquidity pools.
It makes sense. And look, we'll come back to that. I want to hit you with a few more questions there. Obviously, this is a panel and that's what we do. Alexander, mate, look, I'm pretty keen to get into this because you're the co-founder and CEO of Onchain, and you offer custodial solutions, which has been a huge talking point. I remember on the podcast that I have, I was speaking to a lot of different exchanges and a lot of different platforms last year and also in 2018, and the custody issue kept on being a major issue. So do you want to tell us a little bit about what you guys are doing, and then we can get into the questions there as well, mate?
Sure. So Onchain Custodian has 3 business lines. The primary one is custody, as you rightly shared, compliant and secure custody, as we like to present it. The second one is helping our customers, especially the high net worth and family offices ones that we have, navigate the crypto space, meaning buy and sell with the right counterparties, with whom we've done due diligence, that we sure will deliver the coins at the end. And also deploy those coins when they've been bought and are in custody into investment products. So earning a yield through lending programs or other capital guaranteed investment products or not, at the discretion of our customers. So we're not advising them, we are presenting them with opportunities on our platform. But to come back to your point on custody, yes, custody, we think, remains the challenge around trading, especially for exchanges. I mean, I used to say a year ago, 2 years ago when we started, look, there is no 1 week or 1 month without a hack or without a problem of custody. Well, guess what? Look back in the last 4 weeks or 6 weeks, KuCoin and OKX have challenges with custody of their shares. One has been hacked and the other ones are, let's say, the cryptos are not available or not withdrawable for private key management or operational issues or reason. I don't think it's acceptable, to be honest, to have exchanges nowadays managing the assets of their customers in an unsecure and inaccessible way. And that's what we're trying to fill as a gap for exchanges. So we have exchanges and also payments platform that use us to manage the wallets of their customers and to manage their liquidity in a way that it's always accessible and will not be suddenly hacked, obviously. We do that, that's our job, our core business. And on the other 2 business lines, we can discuss a bit later, but that's more targeted to our high net worth individuals and family offices type of customers, or corporates even, who wants to have, through one single window, one KYC, one platform, one login, not only the access to their coins that they already have, but also the ability to buy at the best price and to invest at the best yield.
Yeah, it sounds like you'd be very busy. I mean, with that sort of an opportunity for people to come into the space, one of the biggest things is risk. You've got to assess your risk in everything. It's the risk of the liquidity, the volatility that we have in the market already. But the biggest one is, what if I, want to put 10 million in and I lose the whole lot because I drop this little thing, or the thing I wrote a bit of paper down because it's so archaic. What do? We write down our phrase on a piece of paper and then go and put it in a safe box. I mean, for the most amazing technology, the most old school method of capturing data for us to use is there. So how are you finding it this year in particular? Are you finding business booming, or is it still trying to get to its feet?
It depends. So I would say that on the exchange side, I think tier 2 exchanges understand that even as a marketing tool, it can be interesting to say that they're working with a custodian because of all the hacks and issues that I've mentioned before. So yes, we do see more interests from exchanges, but also because of regulation. So for example, in Singapore, the Payment Service Act is being amended for the moment to include custody as a requirement as soon as you manage keys for your customers, some of those exchanges or some of those players, hedge funds or who are managing assets of customers might not want to be licensed as a custodian. So we're having those type of contacts today to help them with providing that service. On the high net worth individual side and family offices side or corporate side, I think there it's really operational efficiency, and convenience. They don't want to care. They're not maximalist in terms of Bitcoin and decentralization. They just want to leverage or to earn from this new instrument type, this new asset type, and they don't care about managing private keys themselves. They understand the risk of doing that like they would do for any assets, and they don't want to take that risk. As simple as that. So they're looking for help, and they were looking for players that are specialized in securing those private keys.
Yeah, I mean, we've seen with a lot of exchanges coming out in the last, well, I mean, look, there's a lot of exchanges for one, but sort of flying a flag saying we have insurance up to this amount, like it's a big thing, right? Are you finding that on the custodial side of things that some of the exchanges are using it in a similar vein, almost like to say, look, we're not here to, we can't hurt you because we're not holding your keys?
Well, you're right. I guess the challenge for some of those exchanges is to go from announcement to reality. And many of those have announced that they're working with custodians, us included, and have not deployed our solution yet. So you know that's something that still requires some time, because most of the founders of those exchanges are crypto maximalists who fully believe in well, although they are in a centralized exchange, believe in decentralization, or at least having control of the assets, of the private keys of their exchange. Forgetting that those assets don't belong to them, but belongs to their customers. And I think it's just a question of mindset change in that space, the same way that it's a mindset change requirement in the traditional space, where they're not used to those type of assets and need to learn about it better and understand how now we have enterprise grade, institutional grade operators, as I call, or market infrastructures, like custodians that can help them and can be trusted to help them doing that securely and in a compliant way.
Oh, mate, we've seen for sure the crypto exchange PR wheel that keeps on turning, but maybe just spinning rubber. So we'll come back to that in just a bit. But thank you very much. Misha Alefirenko.
Hey.
Did I get that right?
Of course. Yeah.
That's a big announcement. The CEO of Velvet Formula, mate. Tell us a little bit about what you're up to, what you're working on, because I'm pretty interested here as well. So what do you do, mate?
Well, I was working on the corporate side as a hedge fund manager for institutions, managing money on the buy side and on the sell side as well. And actually, I got in crypto back in 2013 when I was just mining first Bitcoins. Then we switched completely to trading infrastructure. And going through this ICO boom in 2017, we realized that actually liquidity is a big issue for the system. I mean, secondary markets for the tokens, crypto exchanges, everybody needs liquidity, and the market is very fragmented. So we founded this company to help this market grow and deliver this liquidity to institutions.
So look, one part of what you do, right, is market making. Obviously, creating a market so that
correct.
People like me can buy and sell. That's what market makers do. Now, I do see, because I speak mostly, or most of my clients in the trading education space are retail clients. I do work with a number of exchanges and basically in providing them with, material content courses for their clientele. But the majority of the people that I'm speaking to are people that are basically at the coalface. These are retail investors, even with decent amounts of money. But a lot of them have a real issue with market makers. Can you tell us what you do so we can just help to squash a couple of those scary stories and misconceptions that they may have in our mind? Or are you going to say, no, they're all right, we're making a buck and screw you?
I think that's thanks. I think that because of a lot of people actually confusing market movers with market makers. Somebody who is actually moving the market like whales. They move in market up, down, whatever they want because they are too big. But market makers is a different thing. Market maker is somebody who actually takes this risk while there is a gap between buyer and seller in the time when buyer came but seller didn't came, and vice versa. So we are filling this gap and we are taking this temporal we're taking this risk on us. So we are basically doing this job, making the market continuous, so smooth, trading smooth, and that's why I think in crypto space where the markets are very fragmented, you have a lot of exchanges, liquidity is not united in one place. You have like 24 hours trading, and you have different time zones. I think market makers for this market are just very essential.
Oh, I mean, for anyone who's watching this or listening to this, you've got to understand, if you've been in a trade and you've tried to exit and you might have, done a bit of fat thing, or you look at a chart and there's a big spike on it. That spike is generally because someone's gone in with a market order and it's just wiped out the entire book. And 1 minute, the coin's up 400%. That poor soul has just been absolutely decimated on that position because there is no liquidity. Market makers help to make sure that you don't get screwed that way.
Exactly.
So thank you for the hard and honest work you do.
Thank you.
And I mean that. It's not a joke. I mean that. It's important. You play a very important, integral part of the ecosystem. Now, look, a few things that I'm going to throw this one up to all of you, and you can all just fight over this one. It's a solid bone that I'll throw to you. I want to understand from anyone's perspective that wants to go. Actually, you know what? I probably should do the right thing here. Let's go with Alexandre. I don't want to see bloodshed on the feed. What do we think is the biggest thing that we need to see to have more institutional and retail money come into the space? Because we are starting to see it, but for us to get from the market capitalization, which is still the eye of a pin, it's still so tiny. How do we get more investors, more institutions, and more money, more market cap into crypto? What do we think, from your point of view, Alexandre, is the biggest hurdle at the moment?
I think what will bring more money, especially on the institutional side, is a proper and stable regulatory environment. So this regulatory environment is getting there, but it's not stable at this stage. So it's very different from countries to countries, with announcement every week, two last week with Hong Kong and Singapore, with changes, with additional requirements for travel rule, for example, for money laundering, and so on and so forth, which is normal because it's a new industry being regulated. That's fine. But it does create some instability and uncertainty that prevents some players to go into the space and some players to leave the space as well. I would not be too sad about some of the players leaving the space because of the fact that it's being regulated. But in some cases, it's just a question of perception about why are there regulation. I think regulation is important for some aspects like money laundering, financing of terrorism. Nobody wants to participate to that well, except criminals. So having some basics requirements on a regulatory point of view for that is a good thing for the industry as a whole. It will improve its reputation, both on the retail space and the corporate space and the institutional space. And once the frameworks will be stabilized in terms of regulations and licensing, that's where you're going to see things happening. And I'm predicting 2021 because we do see major changes in how customers approach us on the traditional space and exchanges as well, as I shared early on. And I think 2021 will attract more players that have never touched Bitcoin before.
Yeah, good answer. I think regulation's a big one. Rishi, I can see you just about jumping out of your seat, mate. Go on.
No, I agree with them completely. It's regulation needs to stabilize. I think, we're starting to see on our side a lot of like family offices, like Alex mentioned, like high net worth individuals, family offices, even macro funds come into the space. But when you start thinking about the larger real money, the pension funds, the big dollars coming in, they're not going to take reputation risk, regulation risk. None of that is worth it to them, right? It's not their money at the end of the day. So I think we need that to stabilize. Singapore's done really well. Hong Kong's done really well. But I think I completely agree with that. It needs to be stabilized across the board in order for these institutions to feel comfortable. And I think the other part of it that I'll add on over there is the education needs to go up, because I think it's looked at as like, you read the high level articles and it's looked at as a scary thing. And I think the high level stuff of MicroStrategy, Square, PayPal, all that type of stuff helps the industry. but they still need to be educated into the opportunities that they're missing out and the regulation and so forth.
Rather than just following the leader.
Exactly.
Yeah. Quentin, mate, what do you think? What's stopping the market from coming to us? What are we going to do?
I mean, obviously the legal one is a big one, especially talking from a Swiss point of view, where we like to really show. I think we've burned ourselves by doing a lot of shady stuff in the 90s. So right now, I like to say that, you know, the win is completely different in Switzerland. You need to show that you're doing better than everyone else in the classroom. So we get really rules that are, I think we can discuss, but I mean, for sure, the legal uncertainty is pretty insane right now. Really, it's like, it's impossible to be compliant everywhere. You know, I mean, I spend a tremendous amount of time every week just, you know, making sure that what we do is still compliant, etc. And, you know, this is what it's very important. This is, I don't want to talk about legal because I think they covered all the aspects, but, you know, number two we had is obviously liquidity, which, because this is still the number one for any trader, you know, who respects himself out there and who wants to do, you know, a bit of like take advantage of the volatility of the underlying. And right now they get actually wrecked, right? So, I mean, we got sometimes buy side in Switzerland or even Hong Kong, you know, and we had like discussions on the phone, like, you know, Quentin, we love that asset class, we love the sharp, we love everything, you know, but in our term sheet, we don't want to deploy under 20 million or 50 million in a trade. And, you know, and then they look at you and they ask you, how do I do that? And, you know, that's the $1 billion question.
Patience.
Yeah. It's like, you know, and then you check the guys like MicroStrategy, what they had to do to procure their, you know, it's very sophisticated, you know, I mean, not really sophisticated, but it's a long process. And the slippage you have is just madness, right? It's absolute madness. And I think this needs to be solved. I mean, as Misha said, you know, a lot of exchanges don't share liquidity. That being said, more and more actually are trying to do so. I know the guys at Kobe are moving their path, Binance also, to share liquidity with, you know, tier 2 venues, tier 3 venues. We think for retail, that's maybe a good solution in short term, but this is not at all, you know, working for institutional adoption, for sure not. I mean, these are our backgrounds. I mean, our lead investors, the Swiss Stock Exchange. So, and they own the Spanish Stock Exchange. So, you know, we understand like kind of like the reflexes that in terms of trading and liquidation of assets. And, you know, we're not there yet. We're not there yet in terms of liquidity. That being said, I think it's all about the one-stop shop story. Obviously, custodians have a big part to play in terms of education, for sure. Because I mean, when you're buying a coin, you're not buying an ETF, you know, that is storing on a private ledger somewhere. You actually own the coin. So for sure, there's a lot of education that is done. Actually, right now, it's funny because, you know, I think a lot of people ask me how they can buy Bitcoin ETFs. You know, that's the number one. I mean, I think I've heard that stuff like really every week for the past 6 months. Really since Bitcoin start to, you know, go back up after March. And I understand where they're coming from, to be honest. My family's from there. I understand where they come from because it's an asset. It's easy to buy, easy to sell. You understand how it works. And you just give all the, I'd like to say, the complicated, you know, nonsense, keys, all the stuff to the guy who just sells the ETF. Yeah. So, you know, I think for us, you know, what that being said, you know, liquidity is getting better and better. I mean, we can see this by basically the arbitrage between liquidity pools is really decreasing. Now it's like we can see it really with like, you know, underlying fiat currencies usually, but the quote tend to be more and more efficient. The market, you know, exchange of information starts to be efficient too. So I think it's growing, but it's for sure it's growing slowly though.
So you're saying regulation, liquidity, we've got reg, liquidity. We've got a bit of a consensus. Misha, you're the last big dog to the plate. Sorry to put you on the spot. What do you think, mate?
Well, I think I agree with Quentin on the point of liquidity, because if you're trying to understand what actually hurdles institutional money to flow in, you better remember or recall the what SEC says on the ETFs issue, and they continuously declined the approval of ETFs, and the number one reason was actually there is no reliable price discovery. So if you're making a product for a broad public like ETF, and there are a bunch of exchanges, and you cannot be like really sure that the price on these exchanges is actually reflecting the reality. Like you said, fat finger somewhere, so somebody is buying on one exchange, it's immediately price disrupted. So the price is actually is not really verifiable at the moment, just because of this fragmented liquidity. And I think that we're becoming closer and closer to the moment when such exchanges like Kraken, which has already a banking license in the United States, when these guys actually will show that this market is actually really solid and the price is not manipulated in any way. It's actually having a lot of participants and market makers to make price discovery real. Then I think we will see the path for ETFs to come into the market, and US finally will approve one of them.
Thank you very much, gentlemen. Wonderful answers. I appreciate it. I wanted to jump into one more thing while I've got you here, Alexander, and speak. I mean, look, it's not just to you, because I know that many of you are working with the high net worth institutional. Actually, I think all of you are at the high net worth institutional grade sort of place. So let's just throw it back up there again, starting with Alexander. Mate, when it comes to your high net worth and your family office money, what's their appetite for digital assets in the space? I mean, I know that I know a few guys that run a couple of firms like that here, well, here in Australia, but in other parts of the world. And about 18 months ago, there was interest because, you know, there's a reason why they've got large amounts of money and they want to diversify. But are you seeing it increase? Is the weight of portfolio increasing on that family office side of things? What are they doing at the moment? What are they feeling like with the space evolving?
Well, I think the current situation, economical situation, has been important in the evolution of their thinking. Let's call it this way. With our US dollar, well, risk of inflation, et cetera, the printing of US dollar, sorry, and all it can lead to. I think some of them have to consider alternative investments and deploy and risk mitigation as well. And they've looked back at Bitcoin, and Bitcoin specifically, and because it's the mother of all in a way, and the best known, the one with the best return as well in terms of when you look back 10 years ago, the one where more and more institutional infrastructures are being put in place, including banks who are looking at being able to take custody of Bitcoins. So yes, definitely the interest is increasing. We do see real increase of asset under custody, so AUC, because of that, but it's not like exponential tripling every month. I think what will be probably one of the winner in that space is not necessarily the direct purchase of Bitcoin and holding of Bitcoin. It's products like fund products, like the one like Grayscale. Is that the one?
Yep.
Who allow to hold those assets without having any complications and with a lot of convenience, like you mentioned. I think it was Quentin, ETFs type of products, because you really don't want to. They want to be exposed, but they don't like the complexity of it. So either the complexity is dealt with through institutions like Onchain, Custodian, and others who are making access to those assets convenient, or it will be done through product offering.
Okay. What do you reckon, Quentin?
Yeah,
Seeing
you know, I
anything
mean,
on the institutional side, that any inflows, anything that's changing over the last 12 months?
yeah, I mean, you know, I don't want to state the obvious here. Obviously, you know, COVID has been, I mean, you know, tremendous, horrible
What's
events
COVID?
for.
What are you talking about?
But you know, very selfishly speaking, for our industry, it's been like actually a very big boost, right? Because you know nobody's available to travel anymore, and you know, we've seen it. You know, this year, I think the DeFi was like, I don't think anybody you know has like the depth right now to analyze what really happened. What you know, and the market inefficiency that we witnessed. But I mean, in terms of you know institutional participation, yeah. Of course, you know, don't get me wrong here. I mean, any analyst here has been a bit sexy, you know, like, okay, yeah, the sharp is cool. And, you know, right now, fixed income is horrible. FX is extremely efficient right now. So it's really hard to generate yields, you know, and I mean, and the S&P 500, if you take out a tech, you know, and the ODI shares tech trackers, I mean, people have been absolutely wrecked, you know, on consumer, you know, industry, you know, legacy kind of industries. So then, you know, the options are here as like, okay, a lot of funds are sitting a massive amount of cash because they liquidated, and they wanted to have some options, obviously. And then, you know, they see obviously the Fed getting a bit crazy with their printers. And so, you know, you don't need to be a genius here to start to think for options. And, you know, what we see in Bitcoin, we see it in gold, you know, and the irony is that both of these assets are actually very hard to hold and very hard to procure in vast amounts and liquidate in vast amounts. So, the parallel is actually very interesting between these two asset classes. But, I joined Alex, and as I said before, it's like owning a Bitcoin today is just a real hustle, right? And you get a trader behind his Bloomberg board. He just wants to put, BTC tracker, buy 15 million, that's it. And that's really what the level of complexity that he's ready to go. That's really it. That's really it. He doesn't want to understand how private keys can work, miners, hash rate, all of this nonsense, because it's not their world. It's not their world. And our role, I think, in terms of companies that work with these guys, I do a lot of education, more than I ever thought I would ever do in my life, to explain, why it's better to have your own coin, etc. And the reality is that then there's a wake-up call. There's a moment where the guy's like, wait, especially from, in Switzerland with banks, or they're like, never, ever, they will give their assets to a third party, right? It's not the culture. And so they're more interested about getting close to a custodian and license the whole tech as it all and have it back in house. So we've seen this happen more often, because they're like, okay, now the question is not if, but how and when, basically. And, that's what we see. And these guys are like, okay, let's get the assets home. Let's do it, everything. So the clients will have the same user journey. He goes on his, app on the phone, buys Bitcoin, sells Bitcoins, but behind the bank has everything. And I think that's, this kind of like, they want to replicate what the trading experience you have right now. If you want to buy Apple, but for Bitcoin, basically. So I think this is in the short term what we're witnessing in this space.
Rishi, what's going on, mate?
Yeah, we're actually, it's interesting you ask, because it's interesting you brought this up, because so BlockFi is definitely well known for its retail arm, but we're actually one of the largest one of the largest lenders in the institutional space. And that's actually what we're doing over here in Asia. So I think it's two main things. One is education, just like how these guys said, and the other is just offering that product suite. So similar to what you said on the ETFs and so forth. So a lot of what we do is structure the entire product and offer that straight to the institution. So it's simple things like the basis trading or crypto fund ARB opportunities. And what we'll do is structure the entire product and then go talk to these firms. And it's simple things that they can understand. It's just a completely different market. And the yields that you earn are, triple, quadruple the amounts that you're earning in the other space. So you instantly at least get their attention. And then it's about the education process to really make them understand, because at the end of the day, they're not deploying small amounts of dollars, right? They're deploying large amounts of dollars. So we really focus on driving the adoption. I think on the retail side, we're very good at it. Like for us, you could deposit USD, and then with the click of a button, you can earn your interest in Bitcoin. So that's a lot of the times we get people into the door and just say, okay, just put a little USD with us and go from there. And then it's the education on these types of structured products and things, and talking to these larger funds. I think once they understand it, because they see the yield and they get attracted immediately. So it's more about the education there.
Yeah, money talks though, right? And you listen when you hear those yields, because the carry trade's dead. The yield's dead everywhere, as you was quite rightly saying before, Quentin. So yeah, it's once the carrot gets big enough, the horses start to gallop, right? And that's what we're seeing at the moment in a big way. Is back to speaking to your old investment banking buddies, and you don't look so silly now for leaving them behind, do you? And finally, Misha, what do you think, mate? Like, where are your thoughts on this whole thing about what they're looking for and how to sort of improve that?
Well, I think that I would like to share you with the trend that we see from our side.
Love
and
to.
actually, I think that besides the institutional interest to the cryptos, I can see that actually general public is having a huge interest for these products. I mean, with these trillions of dollars printed, so people starting to realize that their money worth nothing. Cash is trash, like it's popular on Wall Street right now. And I think that other big institutional chunk is just about to come to this market as well. This is the retail banks who actually do not offer any products for their clients at the moment. And I think we will see next year a wave of these retail banks in Europe and the US starting to offer this product, just about thinking to enter this market. While hedge funds and money managers, digital asset managers are basically all in the market already, or one step in. But these guys even don't started preparing yet. So I think that we will see this big flow of retail banks come into the markets and offering these products to their clients.
Well, I like the sound of that. And with that, gentlemen, we have hit our time limit. Thank you so much for your time. Ladies and gentlemen, we've got Rishi. I'm just going to stick with first names. All right, let me do that. Please give me that one right. Is that okay, gentlemen?
No problem.
Thank you. I'm just going to take your silence as a yes. We've got Rishi, who's the Director of Business Development through Asia for BlockFi. Quentin, the Chief Operating Officer of SIBEX Exchange. Go and check them out. Alexandre, co-founder and CEO of Onchain, which was a custodial options and whatnot. And of course, Misha there at the end, CEO of Velvet Formula. And I have been and still am Craig Cobb of tradercobb.com. Go and check out more about all of what you've heard here. It sounds very bullish for the space. And I hope you enjoy the rest of Blockchain 2020. And next year, let's hope we can all get together, sit down and do this and crack a cold one after. Make sure you speak to your friends. Check they're okay. It's been a tough year. If you're not okay, call your friends. It's important we work together. Much love and respect. See you next time.